Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin charts, as you might want to proceed with caution going into this week if you're feeling bullish on Bitcoin's price. And so with that in mind, let's jump right into the charts. And actually, before we get into the charts, I want to take a look at the open interest for the expiring options for the end of the month, which would be this Friday. Today is Monday, September 29th. And right now you can see the max pain price is coming in at 26.5. Now, if you're not familiar with what the max pain price is, it's basically the strike price where if the price actually closes at, the majority of the options will expire worthless. So with that being said, if come Friday Bitcoin's price closes around this 26.5 level, both the majority of the puts and the calls, the bullish and bearish positions, would close worthless. Now, with that in mind, this week we could see a battle for the price, and in this case the bears would want to push the price down, perhaps down to around this 23.5 level, and perhaps be able to capture some profit on these bearish positions. Now, on the flip side, the bulls would probably be lucky actually to get the price to close up here around a $30,000 strike price, and that would lock in at least some profit. But in reality, they would still have a lot of meat left on the bone all the way up here towards around $34,000 strike price. And again, not very likely given the current price action on the charts is trending bearish. So let's jump over here to the charts, and we will start over here on the daily candles for Bitcoin USDT on the Binance chart. And so each one of these candles or bars represents a day worth of price action for Bitcoin USDT pair. And right now, looking at the chart, you can see Bitcoin set a lower high, thus we have a downward trend line on the top of the candles, and then we have a supporting trend line down here across the bottom, and this sets up a descending triangle, and descending triangles are considered a bearish chart pattern. Now, they don't always break bearish, but when they do, we can look at the target for a break towards the downside, and if we draw in our target and drop that in down here, the target would be all the way down here around 22,000. And so the bears would actually be happy with a close down here around 22,000 by the end of the week, because then more of their options would obviously expire in the profit, and thus we could see a lot of sell pressure to achieve that. However, there will more than likely be a lot of resistance down here. If we check our 6 and look back, this 25,000 price level is a level of support. And so on the flip side, if the bulls are able to get a breakout towards the top side by the end of the week, then the bulls would be looking at a target up here around 30,000, which is not a coincidence. That would be a level that the price of Bitcoin runs into resistance. If we look back here and check our 6, you can see there's a whole lot of resistance up here at that level, and thus Bitcoin's price would more than likely have a very difficult time getting above this 30,000 level. In fact, you can see I have a red line dropped in here around 29,000, which was a pretty strong level of support until it wasn't. When Bitcoin's price broke down below that, that was a very key signal to get short, because that level of support broke. And as you can see, Bitcoin's price did in fact sell off. Now, to look at other levels of support and resistance, we can drop in the Recon Auto Fib Retracement Indicator. And something that stands out to me is the 618 level. Currently, Bitcoin has been rejected pretty much at that level recently at 618 or 27.7. We can see the rejection here, and then more recently on Tuesday of last week, Bitcoin wicked up into that level. thus setting a lower high, and has since started to roll over. The question is, do the bears continue the sell pressure back down here to the 25,000 level, much like they did after Bitcoin's price rejected here? The price of Bitcoin did eventually sell off back down to this 25,000 level. And in fact, the 786 level, which could have been support but ended up not being support at 26.5, the bears were able to get the price right through there. It did act as support at least for a couple days, but again, the bears yesterday got the price down below there, and now this 786 level more than likely will act as resistance as it has in the past. So now the bears will have their sights set on 25,000 and getting this price back down here. And by the end of the week, actually, they want to get the price through there and down to 1272, which happens to be 23,360. And that is right around that 23.5 level we were looking at over on the open interest for those options. So at the end of the day, the bears more than likely have their sights set on the 1272. Now after the 1272, or around 23.5, it's pretty much open air all the way down here to the 1618, which would put Bitcoin's price at around 21,000. Now on the flip side, if the bulls can get the price above and close above the 618 level, which is coming in at 27.7, then they could have their sights set on some of these higher targets. However, the 618 level will more than likely be a strong level of resistance, but after the 618 level, then Bitcoin's price has even more resistance. It's more than likely to run into at the 50% level at around 28.5. That was kind of a level of support, more than likely flip into a future level of resistance. And then the 382 level coming in at around 29,200. Again, a level of support, obviously, until it wasn't when the price broke down. And in fact, the zone pretty much between the 382 and the 236, which is 29,000 to say 30,000, that is the zone. More than likely, if Bitcoin's price reaches up into here, will be a very strong level of resistance. As you can see, if we look back and check our 6, Bitcoin's price got somewhat trapped in that zone before it actually broke down. And right now, Bitcoin's price does appear to be trapped again in a zone between the 618 or 27.7 level and 25,000 level. There is a possibility Bitcoin's price is just setting up a similar pattern to what it did back here and about to break down even lower. But if the bulls are able to break out of this zone, then the next target is clear up here at around 32,000, which would be where Bitcoin rejected at back here. However, again, if you're bullish, you want to proceed with caution. The current price action is bearish. In fact, if we drop in the Recon EMA ribbon, we can see that the ribbon has flipped bearish ever since the sell-off. Your reds and yellows are on top of your blues and greens. Bitcoin's price got into the ribbon only to get rejected by the resistance of the ribbon, and again more recently got up to the top of the ribbon but has since rejected and is now again down below the ribbon. And so it's not uncommon for the EMA ribbon to act as resistance. So again, the bulls need to get the price above 27,000 to even be on top of the ribbon, and more than likely they need to get above that 27.7 level, which is the 618 level on the Fibonacci retracement indicator. So again, if we drop in our drawing tools, we can see the descending triangle along with a bearish EMA ribbon, lower high, price action is bearish. Thus, if you're bullish this week, proceed with caution. And so I think that's enough jaw-jacking for this video. If there are any major changes over here on the charts, I will do an updated video. So now would be a good time to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.